Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. Lots to talk about today because of the turnaround, huge reversals we are seeing in the markets. And we have the stock market mounting one of its biggest rallies in history after President Donald Trump announced a pause in some of his reciprocal tariffs on the globe, causing a market that has been under extreme pressure for the past week to explode higher. So the S&P 500 soared 9.5% for its biggest one-day gain since 2008 to 5,457. The Dow was up 7.8%, around 2,963 points to 40,608. That is its biggest percentage advance since March 2020. And the Nasdaq Composite was the outperformer, over 12% higher, notching its largest one-day jump since 2001 and its second best day ever. For more insights, we are joined by Chris Weston. He is the head of research for Pepperstone. Chris, how are you doing on a pretty busy morning?
It's been a long day. I've only been at work for 2 hours, and it feels like I've been here for a week. So, it's been crazy and chaotic, and it's been obviously a lot of relief coming through in markets. Are we out of the woods? Probably not. There's still a lot of uncertainty, and obviously economics are still not going to necessarily get hugely positively impacted by this. We're getting rate cuts. Have been taken off the table, but things have come alive in markets, and we haven't seen days like this for a long, long time.
We haven't seen this, I imagine, since back a few years ago in COVID when we had huge swings, but even then, not to that magnitude. So how are markets adjusting to the latest signals? Was this a big surprise for you, at least with the messaging coming out from the White House?
Well, I think the market reaction tells you this was a surprise. We kind of got a bit of a trial balloon on Monday when we saw the fake news coming through of a 90-day pause, and that sort of, whilst there was conjecture around how materialistic that was, what it did show us is that if we were to see signs of a pause, we knew how the market was going to react, because once that fake news came out, that we did see a sort of 8-9% move in S&P futures at the time. So we knew any kind of situation around that. But I think Trump had to do something pretty soon. I mean, the markets were moving around with such ferocity, and levels of volatility were so high that things were starting to break. The bond market was showing real signs of cracks. Swap spreads were, the lowest levels for a record lows. The volatility in, the long end of the 30-year in Japan and the US was incredible. And, you just don't have realised volatility at these levels for a sustained period of time without something breaking down. And Jamie Dimon, the CEO of JP Morgan, mentioned it, that something had to happen soon and they needed to act, and they did. So, did the markets win? Well, one could argue the bond market something had to happen for the bond market. Otherwise, we would have potentially seen some sort of SVB type event playing through in markets, and Trump had to come through. He'll obviously claim this as, that he's got a great deal for Americans. But we've seen the Nasdaq close up 12%, and the Mag 7 stocks have absolutely gone ballistic, and volatility has collapsed. The VIX is down 19 handles or so. So the market will claim this one.
Yeah, Chris, what market's telling you about the odds of a recession on the horizon? We've got Goldman Sachs saying the chance of recession, not as much as before. In fact, they are reversing their call for one. So where are we right now when it comes to...
Goldman Sachs, you couldn't make it up, to be honest. I mean, at 1 p.m. New York time, exactly on 1 p.m. at New York time, Goldman issued a recession saying it's 65% probability over the next year. 18 minutes later, Donald Trump then posted his 90-day pause, and then at 10 past 2, an hour and 10 minutes after they're making their call, then they reversed it. So you couldn't make it up. I mean, recession is clearly not the market's base case anymore. We've taken that off the table, but we still see 10% tariffs in across the board. But obviously, China's a different beast. We're still going to see low growth. Business uncertainty is still going to be pretty high. It's not like people are going to get into the boardroom and suddenly go, let's make outrageous capex plan. We've now got the visibility to make business decisions on the basis of what we've seen. And 10% tariffs are still going to be inflationary, and we've still got the economics to come down. So, I think we're not going to get a recession. I don't think that's going to be the case when markets price that out. But we're still going to see a hit to growth, and inflation is going to rise on the back of 10% tariffs and what we're seeing in China. So, that's probably priced into markets now. And obviously we've seen a position adjustment, but we're still going to look at the data in the coming months to see how this all plays out.
Yeah, so the can's been kicked down the road to some extent. 90-day suspension, so not exactly taken off the table. Plus, you've got the China part of the equation where we have 125% tariffs. Would you expect this to escalate even further from this point?
Well, I think Donald Trump's made it pretty clear that he and the White House don't expect to see another retaliation from China, and they've obviously taken retaliation from Europe off the table as well. I think it seems a low probability that we get China coming out again. We can't rule it off, of course, but given that he's shown a hand that other nations can get a reprieve, I think what the market's obviously looking for now is the chance that Xi and Trump get together at some stage in the future and they formulate some sort of deal which takes tariff rates back down to more sort of normal levels. And that's probably where the market's thinking rather than whether China retaliate. And what we're going to see in Chinese markets today is measures put in place to try and stabilise the stock market, any kind of further fallout. Obviously, a lot of people have been talking about this idea that if Chinese firms are not going to be selling to the US anymore, and Chinese firms are selling out treasuries to, because they're not going to be doing so much business there, are they going to sell to Europe? That doesn't look like the case. So, they've got to take it out on the currency channels and depreciate the yuan, through a gradual depreciation. Well, that doesn't look like that's the case either. So, we're just looking at China now. But, it looks like they're going to be looking to use the national team to sort of lean on stocks and try and push up markets today. Yeah,
Chris, how do investors approach this situation right now? Because it's quite tough to catch a bottom going by what we've seen in recent days. Things just shot up so fast. Investors will be struggling to find a tough window to enter in that sense with the huge reversal we've seen overnight.
Yeah, well, we've seen the S&P now. It's retraced 50% of the losses that we saw, 20%, 21% drawdown that we saw through this run. So we've managed to push up to about 50% of that. So we're at sort of more of a fair value now. We've priced out recession risk to an extent. But you've got the VIX, the volatility index in the S&P now trading at 33%. So it's come down massively. Biggest one-day decline in the VIX that we've ever seen, of course, but we are coming off high levels. But that still implies that the S&P is going to be trading in up or down 2.1% a day. So the market is still trying to price risk where we are, and I think that's going to take a little bit of time to settle down. So there's still what's going to happen to company earnings, what's going to be coming out for economics. We're still going to model that with these new tariff regimes in place, and that's going to take a little bit of time to work out. But for now, we've sort of taken off a worst case scenario off the table. And does this mean people are going to be looking to buy pullbacks? I'm not so sure. So I think we're still in for a bit of choppy trade as markets try and find a fair value and try and price risks about where we are.
Yeah, talking about pricing in risks, what's the forecast for the FOMC rate path ahead? Some are calling for no cuts. You've got some going for 4 cuts as well. Where are you sitting on this?
Well, I mean, obviously, we've got the next Fed meeting coming through on the 7th of May. Obviously, we've got CPI tonight. That's going to be interesting. That might we'll see what happens there. And then, we start looking at the April data series, which is really going to be very interesting. But, if you look at where market pricing is now, we've got a meeting coming through on the 7th of May that's obviously going to see them being kept on hold. The 18th of June, there's about a 60% chance implied into swap spreads at the moment. And I'd probably be looking at this moment, probably July if we're going to get a cut, maybe September is probably where I'd be looking at. And, we've got 3 rate cuts being priced in by the end of the year into markets. So, is that fair? We'll have to see what the data comes through. At the moment, it feels like it's probably a little bit overdone. Maybe 2 cuts, given where the Fed are at the moment, given how constrained they are with inflation. But, I certainly don't think we're going to get anything until July at a minimum here.
All right, also watch out for inflation data as well as what's going on with the consumer, especially with the earnings come out soon. We've been in conversation with Chris Weston. He's the head of research for Pepperstone. Chris, thanks as always for your time and insights.
Thanks very much. Thanks for me on.
Have a great day ahead, Chris. Stay on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.